Yeah, we've definitely been doing that also over the last weeks and months. Actually, I mean, I was just reading a report this morning that when you look at the Trans-Pacific trade, for example, that total capacity that's available in the month of September is actually well over what was available last year. So I think that's a clear sign that capacity is being brought back in response to strong demand.
Much of it, though, seems to be very clear that the traffic is going only in one direction, i.e. coming out of Asia Pacific and China and then heading to the United States or to Europe at this point. What are you seeing in terms of the reverse of those flows?
I mean, flows out of the US are somewhat weak. Yeah, out of Europe, volumes are strong. Yeah, but you are right that it's predominantly out of Asia at this point in time, and that also causes some difficulties in getting the empties back, for example. But we're working hard to try and make that work.
You've been saying that probably rates were far too low in the past and that the current level is most likely more appropriate. Is that rate level here to stay, or are you also looking into lowering them once again there's more capacity?
Rates tend to go up and down, yeah, and that's been like that for a long time. I mean, I've said at some point that rates actually should be a little bit higher, also because when you look at the industry, nobody's been earning his cost of capital over the last 10 or 12 years or so. So that's more the background of that. I think what you see today is that there are some trades where the rates are up, yeah, simply because demand is very strong, and there's other trades where rates are actually going down. So if I look at it on average, then rates are actually not up all that much. And I think if you look at our portfolio, then we have a very balanced portfolio around the globe. So I think that's actually a fairly good indicator. Of course, if you only look at rates going from China to the US, those are very high, yeah, at this point in time.
Let's look a bit about your prospects for the second half of this year, because some people are arguing that it could actually be getting worse once again, given the infection rate everywhere.
Yeah, I mean, that could be. I mean, I think there's an enormous level of uncertainty right now, and we have some visibility for the next 4, 8, maybe 12 weeks, and there the outlook, I think, is fairly healthy. When we talk to our customers, many of them are still having decent sell-through rates. So for the moment, inventories are not low. So the likelihood that things will fall off a cliff in the upcoming weeks is probably not very high. Yeah, but having said that, we've been surprised a couple of times already this year, and we need to stay close to what's happening and then adjust if and when required.
Rolf, I'm curious about your view on the changes we're seeing in the industry to hit sustainability targets, and clearly the big change in regulation around sulfur at the start of this year, the industry being one of the heavy air pollutants, 18% of all new air pollutants coming from your industry. What changes are you seeing on the ground this year as the world also battles the coronavirus crisis?
Well, I mean, first of all, I think the fact that IMO 2020 came was a very good measure, yeah, because that certainly helped, especially sulfur emissions that got down very significantly. And then I think it's very clear that there's more that we still need to do, even if over the last 10 years or so we have reduced emissions per TU with about 50%. But I think it's fair to assume that if we look ahead the next 10 years, that we probably have to do something similar again. And I think that's also very fair and square. And we're trying to do whatever we can to make that happen. But it's also quite clear that in order to do that, we will have to invest in new technology and more modern ships at some point, because otherwise it's going to be very difficult to achieve those targets.
So let me ask you about that investment then. Clearly, we've got a very challenging outlook for the industry with the demand side. What does that mean in terms of the way companies are poised? Do you think there's going to be more consolidation to allow more investment down the track?
I personally don't see a lot more consolidation. I mean, a lot has happened in this industry over the last 5, 6 years. And I think right now we're at a stage where you still have a very fair amount of competition on most of the main trades. And you also see that if more people would get together, the incremental benefits of that would not be all that high. Yeah? I'd also say that most of the bigger players right now should have a balance sheet that is sufficiently strong to invest to replenish their fleet, because at some stage you'll see that ships that have been built in the late 90s and the early 2000s will have to be phased out. And of course, for that you need then new and more modern and probably also more environmentally friendly tonnage.